Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the August 11th stock market wrap-up for you to use on August 12th. First off, just wanted to say the hurricane turned into a tropical storm, then turned into a depression, and I tell you what, it ran right into the West Maui Mountains and was blocked. Where I live in Lahaina, Maui, we didn't even get a drop of rain. A lot of wind, but you can see the clouds going all around us. So thank you, West Maui Mountains. So no problems today at all that I did expect us to have. So you will have everything updated by the morning by 5 a.m. Eastern, like always. So let's go ahead and start this thing off with the New York Stock Exchange. You'll see that the NYSE here has lower volume than the day before. However, this volume is wrong. Now let's go down to the Investors Business Daily graphs, markets, NYSE, and let's look at what the volume really is. So this is a daily chart. Now look at the volume right here. You can see that it was lower really than the day before, and today is an actual distribution day on the New York Stock Exchange. Now if you don't know, recently there's been one distribution day here, another one here, that's 2, that's 3. So that's 3 distribution days in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. 3 and 11 days, not that bad. But what is a little bit, and then let me go ahead and show you this. So this is how you can look at some things here. These are going to be the highs that you want to see it get through to be bullish again. And right now you can say that this is where the pattern will be. Let's connect those lows in right here. So where the NYSE goes from here will be if it's going to be bullish or bearish. Now another thing you could also do, like I said, I see all these lines all day long in my head. You can connect the March lows through the July lows and say that this is going to be your support area too, which means that's going to intersect with the 50-day moving average soon. And if this market pulls back, it might find support there and keep rallying. Or it might break down below the July lows and then break through the late March lows and break through the March lows. I mean, we don't know. Nobody knows the future. Nobody knows the future. So you prepare for everything. Right now, all indications looking at this weekly shows that we've got a market that's tired. We have a churning week so far, heavier volume than any week during the rally of the most recent trend. So we can say that at least the lows in July are at risk to be broken. So the lows in July are at risk to be broken since the rally on lower volume is being trumped by this recent distribution. But once again, that's right. The NYSE volume is sketchy. So we want to go here and we want to look at this weekly and then see it. And you'll see volume's actually lower. Nothing to worry about. That's the importance of using different charts on different time frames to get the truth. Telechart isn't telling us the truth on the NYSE. Now, it does on everything else besides the S&P 500 and NYSE's volume, but I also want to show the S&P 500. Same thing here. Let's get rid of that line, and what you can do here is you can connect the March lows here with the July lows, and you see you have a steeper uptrend. You can see that this line is already above the 50-day moving average almost. So it's going to probably hit that uptrend line before it hits the 50-day moving average. And another line you can use is just to use all of these recent lows that we're connecting with the July lows, and you have a more flat out, I guess area find support. Or you could do this and say that you are using this area as support for the uptrend, and you can see that it's starting to roll over. So the first breakdown sign is starting to come through as it started to come through on the breakdown on, what is that, the 6th or 7th? Yeah, the 6th. And since then, it's been doing its 2D rollover. So S&P 500, to me, it's all bullish because it's above the 50-day moving average, just not looking as healthy. Now, the NASDAQ kind of shows a little bit more of a uh-oh possibility story. First off, you can see that it's kind of rolling over here. Let me go ahead and print the screen and put this on the paint thing so I can do it really quick. Oh, V. I got to do the V. So I'm going to draw a squiggly line, I guess. I don't know. And what you can see here is that, now watch what I can do here. See that? It's kind of rolling over. And it kind of, oh, why is it doing that? All right, let go of it. And it kind of did that here too, but it worked its way out. And it kind of did that. Whatever. These things are weird. I don't know how this works. Okay, whatever. That's done. That's done. And it kind of did that here too, as it kind of rolled over. So you can see the rollover there. You can see the rollover that I just messed up there. And you can see another rollover. However, before, look at these two rollovers. you only have one distribution day here, and it's a very bullish intraday reversal. And then the following distribution days that followed it were below average. And then after that, you didn't have any more distribution days. This doesn't even count because of the bullish tail. These days, it started to count. It looked like it was going to be uh-oh time. But then you got the heavy volume support. And then, of course, you had the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days up in a row. They completely reversed it. But now, recently, you have something a little bit different. You have a lot of distribution days in a row. 1, 2, third, fourth day. And on the fifth day, distribution day number 3. So let's go back to now that you can see the rollover in the price here, slight rollover that I can't draw in Telechart. I can now show you that on the 5th distribution day, but bullish looking overall. Then the 6th looked like a real distribution day. And now, of course, again, it looks like a real distribution day today. So that's 2 in a row, then 2 days of no distribution, then another distribution day. So that's 3 in 6 days. And like William O'Neill just said today on the Tiger Financial News Network or whatever it's called, I don't know, you saw that he said he looks out for 6 and 3 to 4 weeks. We've got 3 and 11 days on the SP 500 NYSE, and we've got 3 and 6 days on the NASDAQ, so that always bothers me. However, I do have one beautiful long in a 3-letter stock, and I'm sure a lot of you could probably ID it anyway, so it's no surprise, but the thing is the limit orders is what's important. Market order is going to be taken, but if you guys chase it up 10 or 20% tomorrow, and it comes back and ends up flat for the day, all I can say is I told you so, and I told you to be careful. So be careful on this particular stock that I don't want to name out loud until video 2. How much time do I have left? 6 minutes, so I'm good for time. So now what I want to show also is the other indexes, the S&P 600. You can see that it had a nasty day today, also down, and that combines with its 2 distribution days here, 1, 2, 3, and 6 days. And then the mid-cap 400 did the worst yesterday. How about today? Nope, SP 600 is. So that mid-cap 400 was also ugly, but it wasn't as ugly, and that's why it doesn't look as bad as the S&P 600. So that was the worst today by far. Now, looking at the very important IBD indexes really quick, let's go ahead and take a look at the IBD 100. And the good news is that you can see there's a little bit of more positive divergence. Today, the IBD 100 was down about 1%. Let's see how much the SP 500 was down. I don't actually remember offhand how much it was down. 1.27%. So it did better than the 500, and that's why you see it holding up. And even the NASDAQ down 1.13% did better than the IBD 100. So congratulations. It's good positive divergence, but don't forget, back here, let me print the screen so subscribers can see this. I don't think free and gold members or silver members can necessarily see this because of how small the chart is. But you can see these were the old lows back in 2008. And even if I cheat a little bit and go a little bit below them and use the early part of 2009 lows, as you can see here with January, whenever it gets to the, on the chart, because I'm sure there's a small lag. If we use the lows in October, December with January as the lows, you can see right here in March, right after the follow-through day, the IBD 100 was breaking down to new 52-week lows. And as you can see right here, now using this area as the 52-week lows, the IBD 100 is very close. So even though the index is moving up, there's still something to worry about. And then, of course, with the IBD 8585, I'm sure it did better than the market today, too. Daily, oh, no. So it was down a little bit over 1% to about 1.25%. Evening out with the S&P 500 and doing a little bit worse than the NASDAQ. NASDAQ was our leader until a little bit after the rally was on its 12th day in July. After that 12th day, the NASDAQ started to make higher highs while the relative strength started to fall, matching what happened with IBD 8585 index. So I'm going to print the screen here. Going to go to my paint. I'm going to put it on here with the Control V. And I'm going to show you, these were the old lows. Oh, let me go here, press this, black. So these were the old lows in 2008 that I'm showing you here. And as you see as we go across, you can see that it broke down to new lows on the relative strength basis right here. Let me draw the circle right here. So there's new lows, clearly new lows. And that's just not good. And if you use after the follow-through day, if you just want to use the let's go back and pretend like you're back to that time, and you use the January relative strength lows as your lows. You can see right after the follow through day, it took it another month, but right whenever it hit the April month, it fell to brand new lows of the previous support that was holding in 2009. And of course now the IBD 8585 is hitting brand new lows, but has come back a little bit, and that's showing a small positive divergence in the short term. But still, the biggest, I guess, display of how bad it is the IBD 100 with the relative strength line hitting new lows right after fall through day. So the only thing I think I want to show you rest on part one, because I don't want to go too much into it, is gold holding on to the 50-day moving average, which is starting to roll over if you look closely. But I still believe that gold is a very long-term play of mine, and I believe it's going to go much higher compared to the dollar. Silver is doing fine, and then platinum.